You already broke a rule today. Maybe it was small. Maybe you told yourself you'd wait for confirmation before entering a trade, and then you didn't wait. Maybe you said you'd cut the loss at a certain level, and then you moved the stop. Maybe you had a plan, a clear, logical, well-thought-out plan, and the moment the market started moving, that plan vanished like it never existed. And the worst part? You knew. You knew what you were supposed to do. You knew the rule. You'd written it down. You'd followed it before. But in that moment, that one specific, high-pressure, emotionally charged moment, something took over, and the rule broke. So why does this keep happening? Not just to you, to almost every trader who has ever sat in front of a screen, to professionals who have been doing this for years, to people who have read every book, watched every video, paid for every course, and still find themselves staring at a trade they never should have taken, or sitting in a loss they should have cut 20 minutes ago. This isn't a strategy problem. This isn't an education problem, and it is absolutely not an intelligence problem. This is a psychology problem, a deep, human, wired into your nervous system psychology problem. And today, we're going to decode it completely. By the end of this video, you're going to understand exactly why you break your rules the moment it matters most. Not the surface-level answer, the real answer. The one that lives underneath the excuses, underneath the market analysis, underneath the story you tell yourself after the fact. Because once you understand why it happens, really understand it, you stop being the victim of your own mind, and you start becoming something else entirely. Let's get into it. Before we go any further, I want you to think about the last time you broke a rule. Don't think about the trade itself. Don't think about whether you made money or lost money. Think about the moment, the exact moment where you knew you were crossing a line and you crossed it anyway. What were you feeling? Urgency, excitement, fear? A kind of electric tension that made it almost impossible to sit still and do nothing. A voice in your head saying, "This is the one," or "You can't afford to miss this," or "Just this once, it's different." That voice, that feeling, that moment, that is what we're here to study today, because that moment is not random. It is not weakness. It is not stupidity. It is the completely predictable output of a brain that was never designed to trade in financial markets. Let that land for a second. Your brain was not designed for this. It was designed for survival. It was designed for a world where threats were physical, where rewards were immediate, and where hesitation could get you killed. The financial markets are the exact opposite of that world. They reward patience, they punish impulsiveness, and they demand that you do nothing in the moments when every cell in your body is screaming at you to act. And your brain hates that. Your brain fights it. Your brain finds incredibly sophisticated, incredibly convincing ways to get you to break the rules. And then, once you've broken them, it helps you build a story that makes it seem like the right decision. This is the cycle, and most traders spend their entire careers trapped inside it. But not today. Today, we break it down, point by point, layer by layer. Here is the psychology behind why you break your rules the moment it matters most. Point 1. Your brain runs on two completely different operating systems, and you don't get to choose which one takes the wheel. There's a concept in psychology called dual process theory. It's been studied, written about, and argued over for decades. You've probably heard it described in different ways: System 1 and System 2, the emotional brain and the rational brain, the fast mind and the slow mind. Here's what it actually means in practical terms. System 1 is fast, it's automatic, it doesn't think, it reacts. It's driven by emotion, instinct, pattern recognition, and past experience. It doesn't care about your trading plan. It doesn't read your journal. It doesn't know what your risk-to-reward ratio is. It just responds, instantly, powerfully, without asking for permission. System 2 is slow. It's deliberate. It's the part of you that wrote the rules in the first place. It understands probabilities. It thinks in time horizons. It can zoom out and see the bigger picture. But here's the thing about System 2. It's exhausting to run. It requires cognitive resources. It requires focus. And under pressure, under real emotional, money on the line pressure, it gets overwhelmed and goes quiet. And the moment System 2 goes quiet, System 1 takes over. That's not a metaphor. That is a literal description of what happens in your brain when you're staring at a trade that's moving against you, or when you see a setup that looks perfect but isn't in your plan, or when you've just had 2 losing trades in a row and something inside you needs to win. In those moments, the rational, rule-following, plan-respecting part of your brain loses the argument. It doesn't even get to finish its sentence. The emotional brain has already moved your hand toward the mouse. It's already calculating position size. It has already decided. And the rational brain, sitting there quietly in the background, watches it happen and says nothing because it's exhausted, because emotional overload depletes the very cognitive resources you need to make disciplined decisions. This is why traders who are tired break more rules. This is why traders who are stressed break more rules. This is why the trader who just took a big loss is statistically far more likely to overtrade, revenge trade, and throw the entire plan out the window. Not because they forgot the rules, but because the part of their brain that enforces the rules has gone offline. And here's what makes it even more complicated. You won't notice it happening in the moment. System 1 doesn't announce itself. It doesn't say, hey, I'm your emotional brain and I'm about to override your rational thinking. It just does it. And then, this is the part that will blow your mind. System 2 wakes up afterward and writes you a story, a perfectly logical, completely convincing story about why the decision you just made was actually the right one. The chart looked strong, the momentum was building, the risk was low. I adapted to market conditions. That story isn't truth. That's your rational brain doing damage control after your emotional brain already made the call. Psychologists call this post hoc rationalization, and it is one of the most dangerous things that can happen to a trader's development, because it makes you think you're learning from your decisions when you're actually just getting better at justifying them. So what's the solution? You can't turn off System 1. You can't just decide to be rational under pressure. That's not how brains work. But what you can do is build systems that protect you from yourself before the emotional moment arrives. Rules that require you to pause, a mandatory 5-second breath before any entry. Checklists that force System 2 to engage before a trade is placed, position sizing rules that remove the intensity from individual trades, predefined exit levels that are set before the trade opens, when you're calm, when System 2 is running the show. The goal isn't to stop your emotions. The goal is to make decisions before your emotions show up for work. Point 2. The rules you break most are the ones you believe least. Read that again, because this one is subtle, and it's responsible for more rule breaking than almost anything else. Here's how it works. You build a trading system, you backtest it, or you follow someone else's framework, or you take a course and write down all the rules, and then you start trading it. And for a while, it works. You follow the rules, you get results, you feel good. Then a losing streak hits, or a rule gets you out of a trade early, and the trade keeps going without you, or you skip a setup because your rules said it didn't qualify, and that trade runs for 500 pips, and you watched it go. And something shifts. A small seed of doubt gets planted. You start asking whether the rules are actually right, whether maybe there's a better way, whether maybe the rules are holding you back instead of protecting you. And that seed of doubt, once it's there, is incredibly difficult to remove. Because now when you're sitting at your screen and you see a trade that violates your rules, your conscious mind is saying this is against the rules. But somewhere deeper, a quieter voice is saying, but are the rules even right? That conflict, that internal disagreement between what you know you're supposed to do and what you actually believe, is where rules go to die. And when you're sitting in a moment of high pressure with real money on the line, with your emotions elevated and your cognitive resources depleted, that dissonance becomes unbearable, and the path of least resistance is to break the rule, take the trade, and relieve the tension. But here's what nobody tells you about this. The problem isn't always the rule. Sometimes the rule is fine. Sometimes the rule is excellent. But the trader's relationship to the rule is broken, and you cannot follow a rule you fundamentally don't trust. Not under pressure, not when it matters, when it costs you something to obey it. This is why two traders can follow the exact same system and get completely different results. One of them believes in the system. One of them is secretly looking for reasons to deviate. Their trades look the same on the surface, but inside, they're operating from completely different psychological frameworks. The fix for this isn't just more discipline. The fix is belief. You have to actually understand why your rules exist, not just what the rule is, but why. What is the logic? What is the evidence? What is the edge that this rule is protecting? When you understand the why, the rule becomes something you want to follow, not something you're forcing yourself to obey. And when you find yourself questioning a rule, stop. Don't trade. Go back and study it. Rebuild your conviction, or change the rule deliberately, in a calm state, outside of market hours. Never adjust a rule in the middle of a trade. That's not adaptation. That's surrender. Point 3. Your identity is fighting against your rules. This is the one that most traders never see coming, because it's not about strategy, it's not about emotions, it's about something much deeper. Who do you believe you are? Not who do you want to be. Who do you actually believe you are right now, at a core level, when nobody's watching and the market is moving and everything is on the line? If you look at your actual trading history, not your planned history, not your journal from when you're feeling good, but your real history of what you actually do under pressure, that history is telling you exactly who you believe you are. And for many traders, that identity is built on things like, I'm someone who takes opportunities. I'm someone who doesn't miss big moves. I'm someone who trusts their gut. I'm someone who figures it out. Those identities are not compatible with following rules. Because rules require you to sit out when you feel like acting. Rules require you to accept uncertainty when your gut is certain. Rules require you to miss trades that look like opportunities. Rules require you to not figure it out in real time, to have already figured it out in advance. And when your behavior in the moment conflicts with your sense of who you are, your identity wins, almost every single time, because identity is one of the most powerful forces in human psychology. We will go to extraordinary lengths to behave in ways that are consistent with how we see ourselves, even when that behavior is objectively hurting us. There's a concept called identity-based behavior. The idea that sustainable, consistent behavior change doesn't come from willpower or rules. It comes from shifting the story you tell yourself about who you are. The trader who sees themselves as a disciplined executor of a process will behave completely differently from the trader who sees themselves as a market reader and opportunity seizer. Not because they have different rules, but because they have different identities. And behavior follows identity like a shadow. Think about the traders you admire, the ones who seem to have ice water in their veins, the ones who follow their rules even when everything is screaming at them not to. What do they have in common? They don't just follow rules, they are the rules. Rule following isn't something they do, it's part of who they are. When they sit out a trade that doesn't qualify, it doesn't feel like sacrifice. It feels natural, because sitting out a bad trade is what they do. It's consistent with their identity. Compare that to the trader who is constantly white-knuckling their way through discipline, the one for whom every rule feels like a leash, every missed trade feels like punishment, every sitting out moment feels like failure. That trader is not struggling with strategy, they are struggling with identity. And the tragic thing is, the harder they try to follow the rules through willpower alone, the more exhausted they get, the more the resentment builds, and eventually, inevitably, they snap. They take the trade, they break the rule, and somewhere deep inside, a small part of them feels relieved because they finally got to be who they actually believe they are. The work here is identity work, and it's not quick and it's not comfortable, but it's the most important work a trader can do. Start asking different questions. Instead of how do I follow my rules, ask who is the kind of trader that naturally follows rules like this? What do they believe? How do they think about missed trades? How do they define success? And then start telling yourself a different story, not a fake story, a chosen story, a story about who you're becoming, what kind of trader you're building yourself into, what it means about your character when you sit out a trade that doesn't qualify. Because the trader you want to become already exists. They're waiting on the other side of the identity shift you haven't made yet. Point 4. Your stress physically changes your brain's risk calculator. This is not motivational language. This is neuroscience. And once you understand it, you'll never look at a bad trading day the same way again. Your brain has a structure called the amygdala, 2 of them actually, 1 on each side, small almond-shaped clusters of neurons sitting deep inside your brain, and their primary job is threat detection and emotional response. When something feels threatening, whether that's a predator in the wild or a trade moving against you, the amygdala fires. It triggers the stress response. It releases cortisol and adrenaline into your bloodstream. And here's what those stress hormones do to your decision-making. They narrow your focus. Literally. Under stress, your attentional field contracts. You stop seeing the big picture, and you start zooming in on whatever feels most threatening or most rewarding in this immediate moment. The trade that's moving against you becomes the only thing that exists. Your trading plan, sitting in another window, might as well be on another planet. They change your risk tolerance. This is the part that's genuinely frightening. Research has shown that acute stress shifts people toward high-variance choices, not because they become more reckless, but because under stress, the brain recalibrates its risk-reward calculation in real time. Losses feel more unbearable, wins feel more necessary, and the result is behavior that looks irrational from the outside, but feels completely logical from the inside. They impair prefrontal cortex function. The prefrontal cortex is where your rules live. It's the seat of planning, discipline, impulse control, long-term thinking, and it's particularly vulnerable to stress hormones. Under high stress, the prefrontal cortex essentially goes offline, not completely, but enough. Enough that the impulse control that was keeping you in your seat gets overwritten. Enough that the long-term thinking that knows this trade doesn't qualify gets drowned out. Enough that you make a decision that the calm, pre-market version of you would never have made. Now, add one more layer. The financial markets are uniquely, specifically, almost diabolically good at triggering this stress response. Think about it. Variable reward schedules, the same thing that makes slot machines psychologically addictive, mean that the emotional intensity of trading never really normalizes. You never quite know when the next win is coming, which means your brain stays in a low level of arousal almost constantly while you're trading. The possibility of losing real money activates loss aversion, which is one of the most powerful emotional forces in human psychology. And the real-time, tick-by-tick movement of prices gives your threat detection system a constant stream of input to react to. The market is a stress machine, and you're trying to follow precise, rational, emotion-free rules while sitting inside a stress machine. Do you see the problem? This is why so many experienced traders talk about the importance of state management, not as a soft, feel-good concept, but as a hard, practical trading edge. Your physiological state directly determines the quality of your decisions. A trader in a calm, regulated nervous system state will execute with far more precision than a trader in an activated, stress-flooded state, even if they have identical knowledge, identical rules, and identical experience. This is why your breathing matters. Seriously, slow, deep, deliberate breathing activates the parasympathetic nervous system, the rest and digest system that counteracts the stress response. It literally changes your neurochemistry in real time. A few slow breaths before an entry isn't a quirky habit, it's a performance tool. This is why your physical environment matters. Noise, disorder, poor lighting, uncomfortable seating all add to your baseline stress level, which means your amygdala is already partially activated before the market even opens. This is why your sleep matters. Sleep deprivation amplifies the amygdala response and weakens prefrontal cortex control. Tired traders break more rules, not because they care less, but because the neurological infrastructure that enforces the rules is running on fumes. Manage your state and you manage your decisions. It's not more complicated than that, but it does require taking it seriously, treating it as a core part of your trading process, not an afterthought. Point 5. You're being rewarded for breaking your rules, and your brain remembers every single time. Here's something that will reshape how you think about discipline. Not every time you break a rule, you lose. Sometimes you break a rule and it works. You take the trade that wasn't in the plan and it goes your way. You move the stop loss and price reverses before hitting the new level. You hold the position longer than you should have and it reaches a new high before pulling back. And your brain treats that outcome as confirmation. This is called intermittent reinforcement, and it's the single most powerful conditioning mechanism in human psychology, stronger than consistent reward, stronger than consistent punishment. An outcome that happens some of the time, unpredictably for the same behavior, that creates the most persistent, most deeply ingrained behavioral patterns imaginable. Think about what the markets are actually doing to your psychology every time a rule break accidentally works out. Your brain releases dopamine, the neurotransmitter associated with reward and learning. It tags that experience as meaningful. It files it under things that work. And the next time you're in a similar situation, the memory of that rewarded rule break surfaces, not as a conscious thought, but as a feeling, a sense that it might work again this time, a pull toward the behavior that got rewarded last time. This is how bad habits become deeply entrenched, not through ignorance, through accidental, intermittent reward. And the markets guarantee this will happen because markets are noisy, because price action doesn't perfectly respect your rules every single time, because sometimes a trade that didn't qualify by your system standards goes on to be a huge winner. And your brain saw that. Your brain filed it. Your brain will bring it up at the worst possible moment, usually the next time you're tempted to break the same rule. There's a term in trading circles, the brain's highlight reel. It's the phenomenon where traders vividly remember the times they broke a rule and got rewarded, and conveniently forget or minimize the times they broke a rule and got punished. This isn't selective memory in the weak sense. This is a real cognitive bias called the availability heuristic, the tendency to judge the likelihood of an outcome based on how easily it comes to mind. And dramatic emotional experiences come to mind more easily than mundane ones. The big win you made by going rogue, that's in vivid color. The 10 small losses that came from similar decisions, those are filed away somewhere, gray and quiet. Your track record of rule breaking looks better in your head than it does in your actual data. Always. This is why journaling, real journaling, detailed journaling with statistics and pattern tracking is not optional for serious traders, because your memory is biased, your emotional recall is biased. The only thing that isn't biased is the numbers. And the numbers, when you track them honestly, will show you something that your gut will resist, that your rule breaks averaged across all instances are costing you money. Not always, but on average. And in trading, averages are everything. The solution to intermittent reinforcement isn't just willpower. You can't simply decide to stop being conditioned by your own past experiences. What you can do is change the feedback loop. Start tracking every rule deviation, not just whether it worked or didn't, but what the actual expected value of deviating is over time. Make the data visible, make it real. Because right now, your brain is running its own internal calculation, and that calculation is biased toward the times breaking the rule worked. You need to override that internal calculation with actual evidence. Because the moment you see clearly and undeniably that your rule deviations are net negative over 100 trades, something shifts. The pull toward the deviation weakens. Not disappears, but weakens. And that's enough to tip the balance. Point 6. The moment it matters most is precisely the moment your rules were designed for, and you've been training to avoid that moment. This is the most paradoxical thing on this entire list, and if you let it sink in, it might change how you think about discipline forever. Your rules exist for high-pressure moments. Let me say that again because it's important. Your rules were designed precisely for the moments you feel most compelled to break them. A rule that says only take trades with a minimum 2-to-1 reward-to-risk ratio, that rule matters most when you see a setup that's emotionally exciting, but the math doesn't work. The rule was built for exactly that moment. A rule that says cut losses at a specific level, that rule matters most when you're staring at a red number and everything inside you is insisting that it will come back. That's the moment the rule was created for. A rule that says no trading after 3 consecutive losses, that rule matters most when you've just had 3 losses and you're filled with the need to recover. That's precisely the moment it's designed to protect you from. But here's what most traders do. Consciously or unconsciously, they train themselves to follow the rules in low-stakes, low-pressure situations and to rationalize deviation in high-stakes, high-pressure situations, the exact opposite of what's needed. They follow the rules when it's easy, and they break the rules when it's hard, which means their rules provide no protection whatsoever in the moments that actually matter. And why does this happen? Because the high-pressure moments are genuinely, objectively difficult. The emotional intensity is real, the competing impulses are real, and avoiding the discomfort of sitting in that pressure, staying in the loss, sitting out the exciting trade, accepting the missed opportunity, that avoidance feels like relief in the moment. Psychologists call this experiential avoidance, the tendency to try and reduce or eliminate uncomfortable internal experiences, feelings, thoughts, sensations, by changing your behavior. And when your rule requires you to feel discomfort, the discomfort of uncertainty, the discomfort of loss, the discomfort of missing out, experiential avoidance kicks in and gives you a very compelling reason to break the rule and end the discomfort. Every time you break a rule to end discomfort, you reinforce 2 things simultaneously. First, you reinforce the rule-breaking behavior. You taught your brain that rule-breaking produces relief. Second, and this is the subtle one, you reinforce the belief that the discomfort was intolerable, that it was too much, that you couldn't handle it. And that belief makes the next uncomfortable moment feel even more threatening, which makes the next rule break even more likely. This is a spiral, and it explains why traders don't just occasionally break rules, they tend to break them with increasing frequency as time goes on, even as they get more experienced, even as they know more, even as they try harder to stop. They aren't getting better at tolerating discomfort, they're getting better at avoiding it. The counterintuitive truth is that the skill you need most in trading is not analytical skill, it's not technical skill, it's not even pattern recognition skill.
It's the ability to sit with discomfort without acting on it, to feel the urge to deviate and do nothing, to feel the pull of the exciting setup and sit on your hands, to sit inside the open loss and feel the burning need to do something and stay exactly where you are. This is not a passive skill. It is an active, practiced, deliberately developed skill, and it requires the same systematic, structured approach that you would bring to developing any other trading skill. You practice it in small doses. You deliberately put yourself in low-stakes situations where you choose to sit with discomfort rather than relieve it. You build the tolerance incrementally. You treat rule following in difficult moments not as a test of your character, but as a practice of a learnable skill. Because it is a skill, not a virtue, not a personality trait, a skill, which means it can be developed, which means it can get better, which means the trader you are today is not the trader you have to be forever. Now, let's bring this all together. You break your rules the moment it matters most because your brain runs on an emotional operating system that was never designed for financial markets, because the rational mind that created your rules gets overwhelmed by the emotional mind that experiences the market in real time, because stress physically changes your neurochemistry and impairs the precise cognitive functions you need to follow a plan, because you've been intermittently rewarded for breaking your rules, which has conditioned you to repeat the behavior, because somewhere inside, your identity is not fully aligned with the kind of trader who follows rules consistently, because you don't always trust the rules you're trying to follow, and because the discomfort of the high-stakes moment has trained you to seek relief, even when relief means deviation. These are not moral failings. They're not character flaws. They're the completely predictable outputs of a human brain attempting to operate in an environment it was never built for. But here's the thing. Understanding why something happens is not the same as accepting it as permanent. You can rewire your operating system, not all at once, not through sheer force of will, but through consistent, systematic, psychologically informed practice. Build your rules when you're calm and understand deeply why each rule exists. Don't trade with rules you don't believe in. Rebuild your conviction or change the rule, but do it deliberately, not in the middle of a trade. Manage your state as seriously as you manage your charts. Sleep, breathe, move, reduce noise, set up your environment for calm focus. Your neurochemistry is a trading variable. Treat it like a 1. Track your rule deviations with the same rigor you track your profits. Make the actual cost of rule breaking visible in your data. Override your biased internal calculation with real numbers. Do the identity work. Stop trying to follow rules that conflict with how you see yourself. Start building a story about the kind of trader you're becoming, one for whom discipline is not a cage, but a craft. Practice sitting with discomfort, in trading and in life. Build the tolerance incrementally. Treat it as a skill, train it like a skill, and watch it develop like a skill. And most importantly, stop expecting discipline to feel easy. It's not supposed to feel easy. The moments where your rules are hardest to follow are the moments where following them matters most. And the traders who are built differently from the average, the ones who seem to have supernatural discipline, they didn't find a way to make it easy. They found a way to do the hard thing anyway. That's the real edge. Not the indicator, not the entry model, not the exit strategy. The ability to execute your plan when everything in your nervous system is screaming at you not to. That is what separates the traders who build lasting accounts from the traders who chase results indefinitely and never quite get there. That is the work. Not just the analytical work, not just the technical work, the human work, the inside work, the work that happens in the space between the signal and the click. And that work is available to you right now. Not when you find a better strategy, not when the market gets easier, not when you have more capital or more experience or more time. Now. If this resonated with you, if you found yourself nodding along at any point in this video, recognizing your own patterns, seeing your own behavior in these descriptions, then you already know what the next step is. It's not to go find a new strategy. It's not to read one more book or watch one more video. It's to go look honestly at your own trading history and ask, where am I breaking my rules? When am I breaking them? What am I feeling in those moments? What does the data actually say about the cost of those deviations? The answers are already there, in your journal, in your trade history, in the patterns you've been trying not to look at directly. Look at them. And if you want more content like this, more psychology, more real exploration of what it actually takes to trade with consistency, then you know what to do. Subscribe, hit the notification bell, because there's a lot more to get into. The psychology of trading is deep, and we've barely scratched the surface. I'll see you in the next one.